Good morning. This is Bottom Line, a feature that started last week that brings you all you need to know about markets and online trading. Tariffs remain the key word, rattling global financial markets. All in all, we continue to see lack of consistency and direction in the markets. On Friday, the JSE ended the week higher, with heavy lifting coming from the mining stocks. Unfortunately, Friday's rebound was not broad-based. So let's take a look here at the mining index. We've seen that the overall index finished just under 0.5% within the green, with strong performance coming from your mining sector. We saw Sibanye up 9% on the day, Anglo Gold jumped 6%, Harmony 5.7%. Basically, everything gold was up. Let's look at how gold really moved on Friday. We saw that the gold price, of course, started the week with gold price below $3,000 mark. We ended the week at just 3,229. Of course, we jumped just slightly above that. That's an 8% increase in the value of the yellow metal that we saw in 5 days. Of course, we could see further upward movement in the price of gold as we begin to make sense of the impact of import taxes, or the so-called tariffs. Another interesting number to look at, $4,700. And according to a study by Yale University, Trump import taxes will cost American family about $4,700 per year. That's almost 90,000 rand added to their annual cost. With higher tariffs imposed on China, American retailers will try likely to find non-Chinese alternatives. It's a shift that will bring a lot of inflation in the US. The question is, do tariffs or import taxes really work? Let's make an example to answer that. A few years ago, South Africans used to travel to Turkey to buy a suit to sell. A beautiful suit from Turkey would unusually cost about 500 rand. And upon arrival at OR Tambo, SARS would stop you and demand that you pay import taxes on your suit. And then duties range between up to 48% on textile. And you add that 48% duties, that's another 240 rand. It then becomes expensive to buy from Turkey, and you're forced to find an alternative supplier here at home. And why tariffs sometimes they don't work. If you look at, for example, in South Africa, we have porous borders where some of this illegal can come in, but also some companies will under-declare what they actually import with their containers. So there you have it. Now, to conclude our segment, we have a look at our Wizard Corner, where we share highs and lows of online trading. And today we are joined by Kolisa Tsingwa. There's a lots of twisted facts, especially online trading. So he's going to be joining us to talk about his highs and lows. Thank you very much for joining us.
Good morning, Tsapo, and thanks for having me.
Let's talk about online trading. Sometimes you find that there are a lot of twisted facts about online trading. You find that what you're told is not necessarily the truth. You need to go out there and experience it yourself. Some people are not even told about. There's a very interesting, we call them margin call margins, where you have to pay the broker if you lose.
Margin calls are basically, it's like a bank saying you've run out of funds, and so you need to add more funds, or we are closing our accounts. So essentially what happens is, if you are trading and the trade goes too far in the wrong direction, you are supposed to fund more capital to keep your account. If you don't, then you lose the account. So that is normally caused by over leveraging or trading too big a lot size. And this is caused by lack of risk management.
The other thing that people don't know with online trading is that you don't actually own the actual share. You leverage on the share. So you are exposed to the movements up or down, which could determine your wins or your losses or your gains.
The truth is, we do not really have market access to the actual market. We're just betting and anticipating market movement. So these are created instruments where you bet on the movement, whether it's going to go up or down. For instance, if you're buying oil, it does not mean you have a barrel of oil. It just means you're anticipating a price hike in oil.
Let's talk about choosing a broker, we know there's been a lot of stories out there about brokers who buy cars for certain individuals so they can show a flashy life. There are also sometimes they show very false accounts that only show the wins. They also use videos of certain individuals just to push up a false narrative. What has been your experience?
Unfortunately, for people, seeing is believing. So there's a perception that a successful trader looks a certain way, drives a certain car, so they have to fund the trader's lifestyle. It's basically the cost of doing doing business. It's just marketing.
And then overall, what have been your trading in terms of this volatile market that we're seeing?
I trade indices, and I've currently been trading USD ZAR because there's a lot that's been happening to the rand with the GNU, and also it being exposed to the commodities market. So it's been like really volatile, and I've been exploiting every movement of it.
Okay, thank you very much. That's it. Thank you very much, Kolisa Zingwa, sharing his highs and lows of trading CFD, or so-called online trading. Join us next week on Morning Live. This is Bottom Line. We'll be back with more on Morning Live after the break.